The price of crude has, of course, been trading at multi-year highs. Supply pressures continue to be supportive of that price, but we do have a meeting next week of OPEC Plus, and then, of course, the longer-term issue of what comes out of COP26. Helima Croft is Global Head of Commodity Strategy at RBC Capital Markets. Helima, great to have you with us.
Thank you for having me on today.
So let's just start with OPEC Plus. Are we expecting anything? And what's your thought about what the OPEC member countries will be thinking about as they head into this meeting?
Well, we've had statements from leading OPEC Plus members, most notably Saudi Arabia, that would seem to indicate that the producer group wants to stick with their modest incremental additions of 400,000 barrels per month. Now, this is putting them at odds with key consuming countries, India, and most notably the United States, which is really saying to OPEC, like, we need additional barrels in order to avert a much higher price situation that threatens global economic growth.
So there has been this concern about how much spare capacity there actually is among OPEC Plus members. What's your analysis on that front?
I mean, we've certainly seen that there have been a couple of countries that have struggled. So OPEC has been, increasing at 400,000 barrels per month on paper, but they're about 15% below that if you look at, the actual production increase that we're seeing, because a couple of producers, Angola, Azerbaijan, Nigeria, they have struggled to meet their production quota. So there are concerns going forward about who can really fill a potential supply gap. And we're really talking about only a handful of countries. And this is where Saudi Arabia really plays that pivotal role as a central banker of oil. That's why the conversations about getting more OPEC oil are really turning almost into a bilateral conversation between the United States and Saudi Arabia. The Biden administration has made it clear that they would like to see Saudi Arabia step up and increase the additions that they're putting on the market, again, because they're very, very concerned about going into a situation in winter where you have a potential energy crisis. And the real catalyst for that would be increased demand for oil, for power generation, for substitution for natural gas. And so that is the concern right now.
And so all of this so tightly tied together. So on the natural gas front, and then those two also connected by that kind of overarching theme of transition and COP and where we're headed.
Yes.
Nat gas, obviously, there's been it's been so interesting, Helima, because in some ways it's always a localized, as a continental kind of a commodity, less so today, I guess, with LNG, but it's right. At the same time, we're seeing these supply constraints in the U.S. and in Europe. And how much of this is a foreshadowing of a tough winter ahead?
I mean, the question is, how cold is winter going to be? I mean, certainly we've had a number of issues that we started to see last year, drought in southern China, problems in Brazil as well with drought, demands for LNG. Then you had a cold winter in Europe, the whole catalyst of factors, low inventory, problems with wind that put us in the situation that we're in right now. And the real concern is there additional natural gas supply available if you were to have a cold winter? And Russia this week announced that they'd be putting more gas into Europe after November 8th. But there are still issues about, does Russia really have surge capacity? Is there an ability for Russia to meet demand in Europe in an especially cold winter? A country like Qatar, they've already indicated that their supplies are going to Asia. If you think about the United States, I mean, they are having, constraints in terms of how many more cargoes they can add because, there are capacity constraints in terms of export facilities. So it's really becoming an interesting question about what does Russia have to give to potentially alleviate a gas crisis in winter?
And what is the answer to that? I mean, it's interesting when we think kind of geopolitically, Helima, that Russia, which it wasn't that long ago where we could have said, Matt, Russia, it's a secondary power. It's yesterday's story. They've got a lot of the stuff we're going to need on many fronts. So how much power can it wield here?
I mean, I think Russia is the energy superstore. I mean, they have coal, which is also in short supply as well. They have natural gas and they have oil. And so as we think about a potential energy crunch, I mean, Russia is the country that's positioned to supply what the world seemingly needs right now. But there are question marks. So, for example, Gazprom cut their operational budgets last year like a whole host of energy companies. They laid off workers. The question is, can Gazprom really surge in terms of incremental volumes in a shortage environment? So that's kind of the question mark. We're going to get a test case for this pretty soon to see how many additional volumes they can really put into Europe after November 8th.
So then let's get to COP and what might come out of it. As you say, I mean, there's something obviously a little weakening about the argument if heading into it, President Biden is saying, let's pump more oil. You could see what China might have to say about that. But what do you think might come out of COP that might kind of further this transition and some of the pressures on the upside that we're seeing in these commodities?
I mean, I think this is not the backdrop that Western leaders wanted going into COP26. When we thought about the start of this year, the Biden administration, first action was to go back into the Paris Climate Accords. Very quick action to signal that combating climate change is going to be a top priority for this administration. But, recently, faced with 7-year highs in terms of U.S. gasoline prices, he's calling for additional OPEC volumes. And this is the challenge that governments are facing, is how do you, expedite this energy transition and the uptake of renewables while at the same time ensuring that you have enough fossil fuels to meet demand in this transition phase. An energy transition does not mean low energy prices. And there is a concern that you could potentially have, a backlash against this emphasis on renewables if consumers feel like they don't have the wherewithal to heat their homes or keep the lights on because of skyrocketing utility prices. So I think this is a challenge. You have a number of governments making these important net zero pledges, net zero by 2050, net zero by 2060, but we are facing this sort of near-term challenge of what do you do in the transition years about ensuring that you have enough affordable, reliable supplies of energy before you can have this massive surge in uptake in renewables.